Welcome to the Diary of a Muslim Entrepreneur. Today I'll be interviewing Ali Jamal, the CEO of Stablegold Properties, where we talk about his real estate portfolio and how he got his start as a real estate investor. From Vancouver, British Columbia, all the way to Atlanta, Georgia. I hope you enjoy the pod. First of all, Ali, welcome to Diary of the Muslim Entrepreneur, the podcast, where we talk about Islamic entrepreneurship across the United States and other parts of the world. And I'm so grateful to have you on the pod because we get to talk about real estate and a little bit more about your upbringing and where you grew up and what brought you to Atlanta all the way from Vancouver, Canada. So I guess let's go ahead and get started. Tell us a little bit more about yourself.
Yeah, first off, thank you for the invitation and me giving me the opportunity to be a part of your podcast. Seen a couple of episodes and really excited to engage with you today and learn a little bit more about yourself as well. I as I mentioned, I'm originally from Vancouver, Canada. I moved here 13 years ago to open up my first hotel location, and essentially, I was back in Vancouver working a corporate job. I had kind of started to dabble in real estate investing already over the time that I was living there, like between the ages of 19 and 27. And when I say dabble in real estate investing, I was kind of like buying single family homes, condos, and things of that nature, and then kind of just renting them.
So were you buying them in full cash or were you financing them?
No, I was financing them. So I was working a corporate job, kind of saving money, taking a down payment and buying, a single family home or a condo. Now, full context, I was doing this quite a few years ago where properties were a lot cheaper in Vancouver. So the first property I bought was a condo in Vancouver for like 170 grand.
Wow.
Right? 170 wouldn't even get me a restroom in Vancouver now. So obviously, so it was much easier to kind of build even a smaller portfolio at that age, and kind of build up. And so essentially I was lucky because as I bought my first place, valuations of real estate in Vancouver just kept going up and up and up. And I was able to kind of utilize leverage against some of the equity being built to acquire more assets. And I did have a massive portfolio when I was 27. I think we had like 7 or 8 homes or something of that nature. So on paper, though, the valuations of those assets were pretty strong because obviously the valuations kept going up. But I was not making a ton of money. Like essentially everything I was making rent-wise was going to paying off my mortgages. Maybe I was cash flowing a little bit, but it was nothing significant, nothing I could leave my job for. But I really enjoyed real estate investing. Like that's where my passion was. That's really what I wanted to do full time. And so I was speaking to my accountant in 2011, just having a general discussion. And I was kind of telling her like, hey, I really want to pivot to real estate investing full time. And obviously I can't do that right now. What do you think? What are some of your ideas? And she was like, look, I'm actually a silent investor in some kind of multifamily apartment complexes, hotels, et cetera, in some regions of the U.S., Atlanta being one of them. You should really look at that. This was 2011. The market had crashed here in the U.S., and so there were some really good opportunities. And so coming out of that, she connected me with a broker friend of hers that was based out in actually Florida, but he was doing some brokering here in Atlanta at the time. And she had kind of connected me with him and said, look, this guy wants to look at potentially acquiring like a multifamily apartment complex or a hotel or something like that. Can you help him find some stuff? And the numbers that she was telling me was almost unbelievable to me. Like she was like, you could buy a 100-unit apartment complex for like $800,000 or $1 million.
Holy moly.
And in my mind frame back then, like back in Vancouver, I was like, I'm like trying to save for a down payment to buy an $800,000 condo that's 600 square feet in Vancouver. And here I would have the ability to potentially acquire this entire asset that's 100 or something units in Atlanta. And so that really got me interested.
So I guess one of the questions that come into my mind is like, if you were to build something out at that time, probably it would be even more expensive than that, right?
Oh, for sure. And that's definitely one of the metrics we to this day look at, right, is replacement cost value.
Got it.
So replacement cost value is one of the underlying components of us looking at acquisitions. One of the first things I look at is if it costs me more today to build this, asset versus, what I'm buying it for today, is it worth my purchasing power? And most likely the answer is going to be yes. So if that's kind of one of the value metrics I use, and I didn't even know anything about that at that time, right? Like I was just kind of like 130 units for $1 million. Like to me, didn't even make sense.
Yeah.
And then I started doing more research on the city, and I was like, okay, well, Atlanta's bigger from a population base than Vancouver. I'm getting this obviously at a very good purchase price. Let's go check it out. And that was kind of the initial kind of phase. So within about a week or two, I'd met the broker. We had walked this 130 unit hotel in Roswell. And I walked the property, and it was in good condition. It was an ex-Hampton Inn prototype, pretty interesting asset. It was empty. It was bank owned at the time, so it wasn't pretty, but it was in decent shape. And I guess the first thing that came to my mind was, what would we do with this? Because I knew that even if we could kind of get it into like really good condition, the question I had to myself was like, who's going to stay here? Like, is the professionals of the world going to stay? Probably not, because like there's a Hilton across the street. They're going to, it just didn't, even with the renovations that we could potentially do, unless we were willing to put in a few $1 million to really upgrade the asset, maybe close it off and make it non-exterior corridor, I didn't see like who the general population who would stay there would be. And so in my first couple of nights in Atlanta, as I was kind of just getting a general feel of the market, I was driving around kind of just looking at local hotels and seeing what kind of occupancy they had. Number one, the occupancy was like almost empty at all the locations. And that was just, I think, a function of the fact that it was in a recession, so there probably wasn't a lot of travel going on at the time. But there was one hotel right next door to this one that I was looking at in Roswell that was jam-packed. Like, parking lot was overflowing into like the street. So I stayed at that hotel that night when I got there, and I found out really quickly what a brilliant business model these guys had. So it was a Studio 6, and essentially, if you're familiar with the Studio 6 model, it's a Motel 6 offshoot. It's owned by Motel 6. Essentially, it's basically an apartment complex that is, or it's a hotel that's run as an apartment complex almost, right? So daily, weekly, monthly type of accommodation. So the beautiful kind of components of this is, if you ever owned residential housing or apartment complexes or whatever, one of your biggest challenges, especially on the lower tier assets like the C class and D class.
So what's a C class or a D class asset as an example?
A C or D class asset is going to be one in maybe a rougher area that's in rougher shape, where you're kind of dealing with a tenant profile of like tenants who are maybe struggling financially, and their rent is going to be lower, but your tenant profile is a little bit riskier.
Got it.
Okay. And so that's kind of C or D class asset, and it's probably not going to be the nicest quality asset in the best area. And so for people who are in that space who own C or D class kind of apartment complexes, one of your biggest challenges is collecting rent. And if you can't collect rent, then you have to go through the eviction process. If you go through the eviction process, there's all these kind of challenges. Well, here you had this hotel where if someone doesn't pay, you just don't get a key card the next day. You're not tied into leases. You're not tied into, so it creates a buffer for your cash flow, right? Where you can offer great prices, but you also can hold people accountable for making sure that they're paying, so your cash flow stays intact. And it was just a very simple, basic thing, but it turns the whole kind of aspect of owning residential real estate on its head. And so I just saw a huge opportunity there. And I was like, look, these guys are already doing something brilliant. Parking lots overflowing. They're 100% occupancy. If I can just do what they're doing, basically copy them, I can probably take a good percentage of their customer base pretty quickly, because I can acquire this asset without taking on a ton of leverage. So I'm not gonna need to go up on price significantly. I could probably be extremely competitive on price, take a good percentage of their customers, and start cash flowing probably within 30 to 60 days. That's kind of the general calculation I was doing. And so, I didn't have the funds to acquire the property at the time. It was about $1 million asset. And so I needed to raise capital from family and friends. And that's essentially what I did. So I went to my mother, went to my uncles, went to kind of...
What were those conversations like? How would you go about presenting, hey, I have $1 million asset that I'm looking at. How would you present that to, let's say, your mom or dad? Because they're sometimes the hardest critics in some cases, right?
Yeah, absolutely. So I think I was lucky in a sense on the family side that while I was growing my real estate portfolio in Vancouver, I was already having all these conversations with them all the time. Like they were very engaged and they were very like even by the time I was 27 to own eight or nine properties in Vancouver, it was an accomplishment, right? It wasn't a massive portfolio, but it was like this was a part of our daily life. You know what I mean? Like we were dealing with tenants. Like my mom was helping me. I was, we were we were working together as a family in this space. So the conversations were organic because of that. You know what I mean? Like it wasn't like just some crazy idea I came to them with. They had seen me from 19 to 27 already build a smart portfolio. So it was in our mind frame. I was already like this, like real estate, like big hot shot, in their mind, which is not a reality, but in their mind frame, I was at that time. So when I was having the conversation specifically with family members, it was a much easier sell. Like because like when I spoke to my mother or spoke to my uncles and other people who had invested in the deal, they already knew I was in this space already on a smaller scale. And then I explained it to them, just like I kind of explained it to you right now, like and it is a very basic concept where it's like, look, I can get 127 units. You already know in Vancouver, I'm buying these places for like $1 million. It's taking like 3 years to save for a down payment. Here, we can like 10x what we're doing as a family right off the bat. So I'll be the sweat equity. I can move here and get this thing up and running. I'll come back home after 6 months to a year after getting this thing up and running, but we'll now have like a 100-unit property that will be spitting cash flow to myself and to the family on a regular basis. And so people like it wasn't that hard to sell them on the concept because the amount was low, so the risk profile was low. The fact that we weren't taking on debt was another component that everyone was really excited about. And the fact that we could acquire a property with so many units in a big city at such a good purchase price kind of it made it easy for me to kind of sell the project. And so within a couple of weeks between family and friends, I was able to kind of raise that $1 million, get some soft commitments and stuff like that. A couple of weeks later, we were able to kind of close on the property because it had to be done fast because this is kind of the space that we were in terms of banks were owning assets and they were kind of like, look, if you want this deal, like move on it quickly. Like, or we're going to find someone else. And they're just trying to get it off their books because they didn't want to have to pay the security to be at the hotels and all this kind of stuff. So to make a long story short, we bought the hotel, bought it out cash. And now we need to figure out how we're going to operate it. And I had never run a hotel before. The only experience I had with hotels is I have some uncles in London who are in the hotel business. And in the summers in my early 20s or even before that, I used to go and work like the front desk at their hotels, like for free, like just family thing. Like, hey, you're here, work the hotels during the day. And it was great. I didn't realize how great that experience would be as time went on. But yeah, that's essentially what happened. So we acquired this hotel. I moved to Atlanta. And this all, again, happened within like a 4-week span. So I quit my job. I'm now in a city that I didn't really know much about. We acquired this exterior corridor hotel. And one of my uncles from London that had invested into the deal, he was like 73 at the time. He was like, look, I'll come with you I'll meet you in Atlanta. And I can't stay long, but I'll be there for a couple of months just to kind of help you get this stuff off the ground. So essentially we, in the first 3 months of trying to just get the hotel open, it was me, my uncle, 73-year-old uncle. We had a kind of maintenance guy that we had hired, and then 2 kind of housekeepers that we had found through like another contact locally that was like, hey, I have these housekeepers, they don't have a job, do you guys want to take them? So it was like a band of us 5 kind of getting this hotel up and running.
Wow.
Going through the rooms, getting them cleaned out, doing all the kind of stuff that we needed to do.
So how long would it take to turn over a room at that
Some
time?
rooms longer than others, just depending on what was in that room, but not that long. The hotel wasn't in that bad condition. Okay. So beds were made up. Right. So like some of the rooms vagrants had broken into and we had to do some stuff, but it wasn't like a full remodel.
Got it.
Like we needed to do a deep clean. We needed to maybe put some new, linens, all that kind of stuff. And the concept was, look, if our goal is to take 50% of the customers from that Studio 6 across the street, then like we don't need to make this a top 5 rated hotel. Like let's, from an economic standpoint, do what we need to do to get it up and running. get it to the place where we can take customers. And that's essentially what we did. So we put we put a lot of our grunt work in, but not a ton of capital just to get the property cleaned up. We didn't even know what to name the hotel. So I called my first hotel Atlanta Hotel, just as like no creativity. Just like, we're in Atlanta. We're actually in Roswell.
Yeah.
Like, we're in Atlanta. Let's just call it Atlanta Hotel. And we put up our first sign had a $25 a night kind of sign on it, like below Atlanta Hotel, to $25 a night. So again, not understanding the local market, not understanding what that would attract, just kind of like, hey, 25 seems like a number that's going to attract people. Let's put it on the board. Well, that attracted a lot of people. So we learned pretty quickly that we needed to kind of get that sign down, but it worked actually. From a guerrilla marketing perspective, just from a marketing perspective, like getting people in the doors. I mean, we filled believe it or not, like within 30 days, 80 of the units were filled with weekly customers.
So 80 out of 130? Or 127.
Yes, yeah. And so it was, and then like 30 days later, we're like 120. Like, it was just so the product matched what the market needed at the time. And like in general, and I think every market needs this, right? Like, I think this concept works anywhere. And we've, I think, proven that over time as we've scaled across the country. And so we just kind of, again, like, it was just, if you look at that kind of story I gave you in terms of our first property, as you can see, it's not some big master plan of me being like, hey, this is the market, let's do the market research demographics and kind of put the puzzle together. Is none of that. And that's what I always tell people is like, my experience has been, you don't know what you're doing, just go out and do it anyways. Utilize some level of general information that kind of puts you in a good risk profile, like the fact that you're owning real estate, and so the money that you're putting something into is backed by real estate. You're buying something in a city that's bigger than the city you're from, so those two things kind of look really good. You're buying it at a pretty good value on a per unit basis. So all these things start stacking up, and you're like, okay, this is probably a good decision. Let's just, and then we'll figure out the other stuff, like how to run a hotel and how hard can it be? Do you know what I mean? Like how, if this person can do it, I definitely can do it. You know what I mean? Like, that's kind of the thought process. And as my business has scaled, I haven't deviated from that thought process. Like, whatever we've kind of touched and got into or scaled into, I've just had that same thought process. Like, if this person can do it, like, it can't be that hard. Let's just try. And if we fail, we'll reiterate and kind of navigate around it. And that's kind of how things have kind of gone.
So it's sort of like, always keep the business as simple as possible, because then it's easier to understand rather than having a super complex business where it would just be impossible to scale or very difficult to scale.
Yeah. And I like, because I've never really been engaged myself in my opinion, in a super complex business, I guess it could be somewhat subjective, because there's probably people out there who have had super complex businesses that have done amazing. I can speak from my experience of just kind of running a very basic business fundamentally, and the way I would describe my business, like when I talk to my team members, I'm like, don't overcomplicate what we're doing. We have a hotel, our product is rooms. Sell the room, clean the room, resell the room. Like, don't we keep going into these things like, oh, well, what about the average daily rate, and what about this, and what about that, and this customer's upset about this promotion, and this. Listen, just clean the room, sell the room, do the same thing the next day. We'll figure out all the other stuff. Do you know what I mean? Like, we sometimes get, in my opinion, like, we sometimes get caught up in a lot of the weeds of this stuff. And it's like, that's what creates fear in our mind from taking that action that I'm talking about. And just screwing up and doing what you need to do.
It's an analysis paralysis problem that a lot of real estate investors actually do have, right? They'll gestate over, these massive Excel sheets, understanding, oh, this is the ROI, the cash on cash return, et cetera, all these things, but they won't actually execute because they're just afraid.
Totally. It's some of the smartest people I know just refuse to part with their capital because, again, like you just said, they overanalyze everything, and their points are legit, right? Like, they'll come back to me after we discussed potentially, investing in a deal or something like that. They'll be like, Ali, what about this? 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 I'm like, absolutely. All of this potentially could happen. Like, at the end of the day, you're not going to be able to do anything in life that has zero risk. Yeah. So, you just got to start looking at the things that potentially could be positive make the risk a part of your profile, and then just weigh it out, right? And go from there.
So then I guess your feedback loop, what would your feedback loop in the hotel business be? Because normally whenever you're building a business of some sort, there's some sort of feedback loop. And when you initially started in Vancouver, you bought one property, you learned from that, and then you built onto the second, third, fourth, so on. That became multiple sets of feedback loops, which then built out the hotel. But in the hotel business, what was that feedback loop? Was it just simply getting the rooms rented and then seeing the feedback from those customers?
Well, I think I think the feedback loop changes and reiterates throughout your career. Mm-hmm. But I think for me, initially, the feedback loop was, yes, partly that. Mm-hmm. And then as well, remember, I was working in the hotels at that time. So I get the direct feedback loop from the customers, right? Like, this is wrong in this is wrong in the room. I should be getting this. I'm not getting this. This price is too high. This price, you know what I mean? You start kind of, so I was, I think, blessed enough to be able to be on the ground where I got that daily feedback loop. And I lived in our first hotel for almost 3 years.
Wow.
So, that gave me a lot of kind of understanding of what the customer profile is like and what type of feedback I'll be getting from them on various things. And that kind of helped us build, I think, a general foundation of what the business, as we scale the business, like what would be the standard processes that we would put in place. And then as time went on, as we scaled, the feedback loop changes because part of your feedback loop now becomes the team members that you're bringing on, right? And as that team grows, like now we have almost over 200 employees.
Wow.
And, now it's like you're getting feedback from all of them on the ground, right? Well, what's happening on a day-to-day basis. And then it even expands to your external stakeholders, right? Like as you're buying properties in different regions of the country, you're going to be, engaged with the cities, you're engaged with police departments and officials and all this kind of stuff. And so that it just grows, right? It's kind of like, it's almost like similar to like a ChatGPT. Like as it grows, like the more information comes in and your knowledge base kind of grows.
Just a little quick announcement. Please subscribe to this channel. I see that 80% of you are not subscribed. Every little subscription helps. It helps us get better guests, newer guests, fresher content, everything. It improves everything across the board. If you could kindly just hit the subscribe button and the bell icon down below, I would really appreciate it. Now back to the pod. Walk me through, so you basically have the hotel, you've had it for 3 years, you're living there. Initially the team was a team of 5. How quickly did you start expanding out your team?
Yeah, great question. It took a while. I would say my first 2 to 3 years, expansion wasn't, like team-wise, wasn't a huge thing for me. So after the first year, investors were pretty happy because we were doing, like I said, occupancy was really good, revenue was pretty decent. And so investors were getting their turns. They were very excited about like more opportunities because real estate prices in Atlanta and the US in general were still somewhat depressed. So they saw a lot of opportunity, and Canadian dollars and like things were going really far in the US at that time. And so we started to expand portfolio wise. Like we acquired a second hotel in Marietta and I think a couple of hotels as well, like within that 3 to 4 year span when I first got here. But in terms of team, I hadn't expanded it that much. So tactically, what I mean by that is like I would work. So when we had 3 locations, I would work a 6-hour shift at, let's say, my Roswell location from the like on the front desk between like 8 and like, I don't know, 3 or whatever, 2 or 3 or whatever it is. Then I would drive over to my Marietta location, work another 3 or 4 hours there. And then to my third location and work another 3 or 4 hours there. The reason being is because it got me engaged with the operations. Like I could touch the operation every day. Obviously, as we expanded up, then the dilution was just too much. I couldn't like go to every single location. But then what I did after that was I started to kind of travel between locations and maybe not work the desk, but I was still engaged in the management aspect of things. Within probably around year 4 is when I started to bring on managers. So like before that, it was just front desk agents and housekeepers and all that sort of stuff. If I had to go back, I would probably hire managers faster because that probably would have enabled us to scale faster or let me see opportunities faster. But I was so focused on kind of like the net operating income of each location, like just managing each and every cost that I could, and like going into the schedules and just going into like every like the minute detail of like being able to get into the black that I kind of missed a lot of those opportunities. So in some ways, I think that was a blessing. In some ways, it probably hurt our scale opportunity a little bit more.
But wouldn't you say that would help you scale now faster? So then it was a beneficial experience regardless.
You mean because it was because I saved capital during that time?
Well, I mean, you saved capital. Well, that was one piece of it. But then even now to this moment in time, you wouldn't, without those experiences, you wouldn't be able to scale even faster today. So, I mean, it was beneficial regardless.
Yeah, potentially. I think, I would say that we probably could have, if my focus was on a larger picture, I think we could have done some bigger things at that time. But I think, again, subjective. Because you said, there's something to say for building those skill sets at that time as well. And that enables you to make better decisions going into the future, yes.
So I guess a question I have is, what did scale actually afford you? Like, what was the purpose of scaling? Like, was it to get, more money, more cars, or what? What was the end goal by growing the portfolio?
So when I first came, the biggest aspect of me, the biggest thing that I thought was going to happen from the perspective of like my engagement with Atlanta and doing business here was I thought I would just be going back home in 6 months. Like I thought I'd get a hotel up and running, put in a manager, and kind of, and things just didn't work out like that because like I felt like I needed to be on the ground for a longer period of time, even just to get that first one running. And then as things were more successful than I anticipated, we started scaling, and I needed to, I was anchored here. I think the initial impetus, if like on day one of like why we were scaling, honestly, it was a couple of reasons. Me being at a stage in my life, I was like hyper ambitious, right? Because I'm like, okay, now I'm here. I'm living in this hotel. I'm like working these long hours. I'm definitely gonna like grow this thing, right? Like I'm not just gonna come here and like do all this and like have one location. Like now I'm like, so I was super hyper ambitious, coupled with I had investors who were like, hey, this is like, you found something here that's like pretty exciting. So like the fuel between those two things were like, okay, I got investors willing to look at helping me grow this thing. How many other people in at my age have that opportunity to kind of scale something that they can really grow into something great? And so that was kind of what fueled it initially. But I think like with anything, as time goes, your reasoning for wanting to scale changes, right? And so as kind of time went on, I started seeing that we were actually creating some value in the communities that we were in, right? That wasn't my initial reason, like by any means, for like starting it. Like I wasn't coming in as a social entrepreneur. But when we acquired it, when I'm seeing that, okay, we're providing really affordable spaces to people who might not be able to get a space. That was another thing where I was like, okay, there's a little bit more to this. That's kind of cool. And then the other component was building people that were working within the organization to kind of new heights within themselves professionally. So like interesting thing, like, almost 15 to 20% of our employee base right now used to be one-time residents of the hotel. So when you see the progression of people, right? Like the director of economy hotels right now, the person who runs my economy hotels portfolio, she started with us as a security guard. So she was basically someone just like allowing people in and out of the gates coming in. She's now running our entire operations. Wow. And so like, that's just one of like many examples I could give you of over time. Like, again, I would be lying to you to say like I came in with this social conscious of like wanting to have this big like positive impact and all this kind of stuff. But over time, these openings come up where you're like, oh wow, this is kind of cool. And I can remake this opportunity multiple times as we scale. So then scale becomes a part of that narrative as well, right? So it's a narrative of, yes, like financially growing, and obviously, finances is a tool for a lot of great things personally and, altruistically, etc. But I think the people component is the bigger thing. Now it's like the people component's the biggest part about it, right? Like if you go to our Economy Hotel website and all that kind of stuff, like what I've really tried to double down on is the impact that we have on families or like people living at the hotels that like have had the opportunity now, like to, you're staying in our hotel for like 6 months, you get back on your feet because you had that affordable accommodation, and then you leave and like you're off to more stable housing. And we have numerous stories on the website where we try to like document that, because a lot of hotels, obviously no hotels that I know like actually document that.
That's true. That's very true.
And a lot of people don't want to document that, right? Because it's not a sexy kind of business to be in, like helping people in the affordable housing space to kind of get back on their feet. But again, part of the blessing of me living on site is I saw that firsthand. So as the business started scaling, I was like, this would be a really cool opportunity to actually document this stuff. And like, I don't think it helps us with investors. Like no investors is like, hey, let me give you money because you're helping people. Like, it doesn't, there's no financial. I think it helps our brand like be aligned with something that's good, which I like, obviously. And it's just, I think it creates an opportunity for like when my children get older and they're like, hey, tell me about your business. We go back to these documented stories and I see it being super impactful for them, right? And so that's kind of one of the drivers for it. But the stories on the website are not just our customers, it's also the trajectory of our employees. So I think that's become the scale side of things. Didn't start that way, but it is now.
So a question here is, how do you decide to promote employees from within and get them to a level where they're, for example, running your economy portfolio? Like, walk me through that journey. How does that look? Do you tell people that, hey, you have the opportunity to do this? Or, I mean, just walk me through that particular lady's scenario where she was initially a security guard.
Yeah. So she just moved up the ranks of the company, right? And so, again, scale enabled us to kind of be able to move her up, right? So she started as security guard. From security guard, we kind of saw that she was really engaged in that job and like doing a really good job. She was always like, she was on point in that role. So we're like, why don't we bring her inside, like bring her to the front desk? I mean, her customer service skills are good, her communication skills are good. Let's see how she does there. Came in at the front desk. She did amazing there, like great customer service skills, etc. So we're like, okay, well, it's only to our benefit. Selfishly, it's to our benefit to promote them and get that value, right? So we're like, okay, let's put her into like an assistant general manager role. Killed it as an assistant general manager. Like whenever we needed scheduling, whatever it was, killed it. So I was like, all right, we got another hotel. Who should we promote into the GM role? I don't want to go outside. We might as well utilize someone inside who's already understands our processes, understands the customer base, etc. So we put her in that GM role. And then she just kind of moved in territory manager role. She killed the territory manager role. Her numbers from a territory perspective was the best in the company. I mean, the results spoke for themselves. Do you know what I mean? Like it was very organic. It wasn't like when I was working in the corporate world, I used to sit down with my boss and he used to have like a chart of like where I could go in the company organization over time as a kind of pitch to me of kind of like, and those, I've never had that really, but I've definitely been a hawk in watching people and being like, okay, let's give them opportunity really quick. I want to keep, because what I find is when you have that, it builds culture from a momentum perspective. Because people then get excited about coming to work. It's hard to get excited about coming to a exterior corridor budget priced hotel every day and managing it with all the challenges that you have to manage, because it's older assets. You're dealing with a more maybe challenging customer base at times. It's just a tougher environment than like, let's say a beautiful 5-star Hilton, right? So then the question for me is on the HR side, what anchor can I have to like actually keep people with me and keep them at the highest performance? And the answer that I've come up with is the leverage that I have is the ability to move people up. So going back to your question on scale enables that. Because if I didn't have scale, let's say I only had 3 hotels, how could I build anyone? How could it? So that kind of, it's almost like they work hand in hand. If that makes sense.
Yeah, that definitely makes sense. So do you have any experiences where you had just really bad employees, and how did you eliminate them? Would you immediately get them out of the business ASAP, or was there a process? Would you do like a PIP plan, a performance improvement plan for those who are listening, of course?
If I was to be totally transparent, I think one of my flaws has been holding people that weren't great employees for too long. at the same time, I think, and what I've had this conversation with like other entrepreneurs, and everyone has different takes on this. But my take a lot of times is like, sometimes you have to deal with the devil that you know versus the devil that you don't know. So there's certain cycles in my business, right, where I was short-staffed. I knew certain individuals were doing things like, let's say, for example, maybe even pocketing money and doing this kind of stuff. This was my challenge. I didn't have enough infrastructure to say, look, if I terminate this person on Monday, will I have someone be able to take their shifts? So now I'm in a position where I'm like, okay, I can terminate them, but I know I'm going to lose a lot more by terminating them. And plus, I'm not going to have coverage and all these kind of issues. So maybe not shooting myself in the foot, understanding that they're doing this, but setting up a strategy so I have a backup plan and I can remove them within a few weeks or maybe a couple months or whatever else. So there's been times where I've held people for long periods of time, like maybe months at a time when I shouldn't have, but I needed to, from a strategic perspective, just to kind of get through that patch. And so, yeah, I think that's, it's something that changes constantly. Like, so I've held people that have not been great, great employees at times. But I think that's fine. I think you just have to go through, some of those.
I've had similar experiences with even my restaurants. It was like, I've had to, just hold on to an employee, although I didn't want to, and then eventually find somebody else who could replace that. So I completely understand that aspect. So after you acquired the one in Roswell, you then acquired one in Marietta? Is that correct?
Yes, that was our second location.
So when you started expanding into the secondary location, was it pretty much the same story? It was you and then maybe a couple other people, and you just...
Yeah, exactly, yeah.
Got it.
So I was lucky enough, that was a running hotel.
Got it.
So it wasn't a shutdown one like the first one. So I just inherited all the employees. Within a week or two, like, you flush out. When you acquire a business, as you might know, like, if you acquire it with some employees, like within your first 2 weeks, you're going to flush out really quickly who's going to stay, who's not going to stay. A lot of times new owners like to get rid of everybody, but obviously I didn't have the infrastructure for that. And I don't I think there's a huge opportunity when you acquire a business that has employees already, where you could have a conversation with people and say, look, what don't you like about your current place?
Yeah.
And, you can just create a better environment. Yeah. What didn't you like? One of the first things is going to be pay, right? Like, I just didn't I feel like I was getting underpaid. Okay, well, let me check what you were getting paid before to make sure it's legit. You're getting paid $7 an hour. Like, at that time, that was like the prevailing pay. All right, what if I can get you to $9? How happy would you? Like, right away, you got a huge win for a team member. And so I think, like, when you acquire a new business, you have a huge opportunity for these micro wins right off the bat that helps develop the culture. So that's been one of the greatest things. Like, I've always tried to keep people, if I can, and just sit down with them for the first day. So any new location we open, I try to be there specifically on the first day to go through that. Even today, I'll go down and sit down with employees, but like, what's your current pay rate? Okay, we're going to do better. What didn't you like? Okay, we're going to do this differently. And it a lot of times creates some sort of momentum. You have to watch for, sometimes people are smart too. Like, they know, okay, we're going to tell him that we're making X dollars so we can make X dollars. And sometimes people are not very honest, and you got to kind of work around that. But more often than not, it's just a matter of little things that you can do to kind of, push people over to being better performers for you.
Got it. All right. So now, how many properties do you have in total for Stablegold Properties?
So we have, I would say, assets under management, and obviously that's somewhat subjective to where the market is at the time. But I'd say we probably have about $80 million of assets under management. Hotel wise, we're looking at about 16 hotel locations. Then we have a residential division. We have a vacation rental division. We have a commercial kind of triple net commercial division. So we have multiple kind of divisions, under our portfolio. Each of the assets is owned kind of separately, and Stablegold is really just kind of it's a marketing umbrella. Each of the assets are kind of really their own separate business.
Got it. So
just kind of gives me the opportunity to kind of say, this is a business that it's kind of it kind of helps me explain what I do.
Got it. So is Stablegold more so of a holdings where it has?
It's not even a holding.
Got it.
I would say it's more just it's more of a brand that we've created that kind of enables us to tell a story of what we do. But like each of our assets are individually owned and operated. So each under its own company, et cetera. And that kind of, that type of structure, enables us to kind of separate the business as much as possible and, keep from a legality standpoint, kind of just keeps our structure a little bit tighter.
So I guess going forward with Stablegold Properties is the goal to continue acquiring until you're...
I think, look, with any entrepreneur, I think the mindset is what are you looking to accomplish by the end of your career? And I think that constantly is changing. So like, I was just talking to, someone else about this the other day, like where I was 3 years ago or 5 years ago in terms of like my vision for the organization and vision for myself is very different than where I am today. As I have children now, they're growing, I'm kind of looking at like what is going to be next for them and how much time I want to spend with them and all this kind of stuff. It's just a totally different vantage point. If you ask me today, I would say, the assets that we are acquiring over time is something that I would hopefully want to have my children engaged with at some point, taking over our company and potentially leading it. But part of that is, I don't know if that's something they want in their future. And so I'm speaking for them at, 4 years old, but at 16, 17, they might have a different vision for their future. And I just want them to be happy, right? So irregardless of whether, but at the very least, we could create at some point over time, we can create a infrastructure of a company where you have a lot more passive investments than active investments. Right now, I think we have a lot more active investments than passive investments. And so if you ask me in a perfect world, where do I see the company going, is me being able to get most of our portfolio into more passive investments that I can eventually pass on to the next generation and let them kind of grow with it or leave it passive.
It's amazing. So have you ever thought about investing in like GPLP funds or establishing those kinds of portfolios so that you can have external investors invest into the business itself? Or do you actively do that already?
We actively do that already.
Okay.
So we'll put together syndications on certain deals. And like most hotel deals I do now, like I'll put together a syndication and acquire. But I'm pretty stringent on what's a good investment for us. And I'd say over the last year, I have, comparatively to any year beforehand, I've been much more aggressive with not doing a deal versus doing a deal. And that was not the case like just a year ago even. Like we acquired a lot more hotels last year. But with interest rates going up, unless I really, I need to feel like when I acquire a hotel, I'm going to make just as much as I made on our first hotel that we acquired. And obviously, it's hard to do that because market dynamics have changed, right? Like, obviously, inflation has gone up, interest rates have gone up. So now, how do you make that puzzle work, right? Like, how do you still make a deal work when interest rates are like 3 times what they were? Valuations of assets are like extremely high comparatively to what they were, etc. My answer has been pivoting to other geographical territories. So looking at the Midwest, etc. But even then, like, unless I'm really getting the margins that I want to get for our investors and for our company, I'm just not going to, I'd rather just hold off and because the market's going to cool down eventually, right? Or certain segments of the market geographically will cool down. Atlanta might never cool down to where it was back in 2009. It's probably never going to happen. But other regions of the country, you will see some softening and opportunity, I think.
Thank you so much for spending so much time with me and talking about your business. I guess if people want to learn more about you, where can they reach out to you? Or if they want to ever invest in any sort of portfolio or syndication deal that you might have, how would they reach out to you?
Yeah, I would say I have a personal website, www.alijamal.com. They're welcome to connect with me on there. That's probably the easiest way to get a hold of me directly. our various kind of divisions, etc. Have their own websites. But if they connect with me through alijamal.com, I'll definitely be able to kind of point them in the right direction, or happy to hear however they like to connect with us.
Absolutely. Well, thank you so much, Ali.
It was great to meet you.
I hope you all enjoyed the episode. I really do appreciate Ali and his team for helping us out here, giving us a space, allowing us to learn. If you want to have if you want to contact Ali whatsoever, his information is down below. And if you want to ever invest in any of his projects, reach out to him directly. And I look forward to seeing you guys in the next episode.